Recently, H&R Block hosted a 24-hour tax talk event, and Friday Girl TV took a moment to talk to Elaine Smith, Master Tax Advisor. This is Ashia, your Friday Girl Correspondent, with some last-minute tax tips I'm sure you could use.
Now, what are some of the things can new entrepreneurs, people who may have just struck out on their own, can do to ensure that when they file their taxes, they won't necessarily get hit with a big tax bill?
Sure. I think this year more than ever we've found people who have, started their own businesses. It's helped them recover, in this economic climate. And the key is track your expenses. You have them, and sometimes you don't even know that you have them. If you set up a website, that's a deduction. If you have to pay for an internet line, if you have advertising in the paper, if you've again, business cards, meal expenses if you're paying to advertise to get clients and you're doing business presentations, all of that's deductible.
When would you suggest that someone should decide whether they actually want to file an extension or if they want to just go ahead and push through and finish their taxes by the deadline?
The important thing to remember is that you need to file an accurate tax return. So if you're not sure you're going to have all your paperwork by April 15th, you can file an extension to have until October 15th to put it all together. If you do owe this year, maybe you have started a business and you've had some income and you haven't been making estimated payments, the best thing you can do to avoid interest and penalties is to make a payment by April 15th.
What advice would you have for any taxpayers that still haven't actually filed their taxes?
Sure, it's not too late to make a change to your tax return. If you are afraid you might owe this year, now more than ever is the best time to put money into an IRA. You can put up to $5,000 into your IRA if you're under 50, and if you're over 50, up to $6,000. You can put up to $3,000 into a health savings account. Another idea is to buy a new home. If you're a new homeowner, I'm sure everyone's been hearing about this $8,000 tax credit for new homeowners. And if you've already been owning a home and you buy a new home, you may be eligible for up to $6,500 tax credit. All things you can do now to still impact your tax return.